and consistent profits as well, okay? So, all right, I just hit the record button so that anybody who's not on the call and who's in the team can actually get a look at this presentation later on. But really what I was saying is that trading is about taking a little bit regularly, all right? And we're going to use tips and tools and techniques which are going to teach you how to do that, okay? So a couple things. First, I really want you to look through opening a demo account. So we're going to be using the Academy services to go through the recorded videos. And in those recorded videos, you're going to get lots and lots of built-in blocks. So you're going to start from what is foreign exchange, what is a pip, when to trade, when not to trade. And you're going to get the bricks that are going to go on top of each other slowly, slowly, slowly until you build your trading mansion. But alongside that, you're going to need to have a demo account. So I'm hoping that you've got a pen and paper. I'm hoping that you're going to be taking notes. We will look at my screen shortly, but I want you to write down some platforms, some brokerage platforms that you can use. When you're ready to, you can actually take your money and deposit your money with the platform. But until that time, you can still use the same product or the same broker for your demo account, all right? Just so you know, to make it all clear, a demo account is an account which you cannot make and cannot lose any money on, all right? It is a fake trading account, quite literally monopoly money. It's numbers on a screen. And what this does, it affords us the opportunity to practice everything that we're learning on the recorded videos and everything that we're learning on the live TV webinars, all right? So what you want to do is open yourself a demo trading account. It usually comes funded with $10,000 or £10,000, depending on the base currency that you choose. And from that, you can start practicing the tips and techniques that you're learning on the Academy. So I'm going to give you a few brokerages that you can look at to open your account with, and really it's your choice. They are all one and the same, really and truly. There are not too many differences between them. Some of the things you can be looking for are leverage. What is the amount of leverage that they give you? Leverage is the amount of times that the broker is going to multiply your money in the marketplace, okay? So for example, if you've got a 1 to 30 leverage, that means every £10 that you risk is going to be the equivalent to £300 in the actual real market if you've got a 1 to 30. Now, most recently, the brokers in the UK reduced their leverage from about 1 to 100 to about 1 to 130, unless you have a professional license. So really 1 to 130 is not bad. If you go outside the UK, you can get a larger leverage, which means your money will go further. But take a list of these names. We are looking in the UK, IG, that's Indigo Gulf Markets. Indigo Gulf Markets. I don't even know what it stands for, IG. I don't know what IG stands for, but it's IG Markets. A very, very big and popular broker that does much more than foreign exchange. They do commodities, they do stocks, they do contracts for difference. They do a lot in the investment world, okay? IG Markets. I personally use CMC Markets. That's my favorite. I love their charting software. We're going to look at some charts later on, but I love the charting software on CMC Markets. You can also look at Plus 500, Trade-in 212, City Index, and you could also look at IC Markets. IC Markets is outside of the UK. Now, here's something that's really important, guys. If you are trading with a UK broker, you will receive protection from the Financial Conduct Authority. So all of your money will be safe. It will be protected up to whatever their limit are. I think it's 85 or 90,000 pounds. I don't remember the exact amount. If you place your money with a UK broker, your money is protected, okay? However, UK brokers are only going to give you leverage, which means they're only going to multiply your money, usually 1 to 30 times what you've put in. Okay, so every trade and every time you place a trade, your money is going to stretch 30 times further than it would if you didn't have leverage. So that's your kind of conundrum. you have got your money protected by UK law if you go with a UK broker, but it doesn't stretch as far as some of the offshore brokers. IC Markets, which I think was the last one I gave you, they are an Australian broker, which is very, very common within the trading community. And IC Markets will give leverage of up to 1 to 100 times. Again, just to recap, it means that if you place a trade of which is going to risk you £100, then that if you trade, then that in the market will equivalently be £10,000. What's 100 times 100? It's like 10,000. I don't know. I'm a trader and I don't know 100 times 100. So I could write it down. But you get my point. If you place your money with these brokers offshore, you can get a bigger leverage, but you may not receive protection when your account grows. So it's a conundrum. It's a conundrum that you need to think about and you need to decide. If you want to have a conversation about that afterwards, then by all means, we can have that conversation afterwards. Okay, guys? So I've given you a list of brokers that you can look at. IG Markets, which is UK-based. CMC Markets, again, another UK company. Plus 500, Trading 212, and IC Markets, which is definitely based outside of the UK. That is an Australian company. All right, so write those ones down. If you've got questions about it, I'll open up the line so that everybody can speak afterwards. But if you've got questions about it, we can definitely answer those before the end of this call or when we speak personally. Okay, a couple of the things that you're going to need if you're really going to take this trading thing seriously. We are what we call technical analysts. Okay, so our style of trading is technical analysts. There's two ways to really understand the market. One way is to look at the way that we do it, which is to look at the charts, to draw lines on those charts, to have kind of mathematical tools and systems which will help us to analyze the information that has already happened in the market. That's the key. When we are examining the charts, we're looking at what has already happened in the market and using that to make a prediction of what may happen next. Okay, that's called technical analysis. And for the most part, the people that we're developing in our team, the tools and techniques that I'm going to share are based around technical analysis. Okay, there is another way to understand the market. A lot of people do this in the banks, or if you go into like the investing community, a lot of people look at this way, which is called fundamental analysis. Now, fundamental analysis looks at news events. It studies the economy. It looks at the manufacturing for any particular country, the interest rates. It looks at the employment numbers, and it makes a calculation based on that, what may happen in one economy versus the other, which economy is doing better than another one, and which economy's currency is becoming more valuable or less valuable. And that's how the fundamentalists are going to place their trade. Now, for me personally, it's long-winded. It is extremely subjective. It is extremely subjective. We had the example a few weeks ago of a fundamental analysis who used the exact same news report. There was a tweet out from the US president, and he used the exact same, or a company. It was like a newspaper or some type of technical magazine. They used the exact same news report and interpreted it in two different ways for the same market. Okay, maybe it was a different person editing the report. Maybe it was a different journalist, but the same paper published two different outcomes from the same news report. Right, that really is fundamental analysis at its extreme, where it can be so subjective that you just don't know which way you're going. However, with that said, I think it's incredibly important that we do keep at least one ear on things like Brexit, which is such a massive deal for our country, that we do keep one ear on things like the Bank of England in interest rate decisions. We must keep an ear on things like the Fed, which is the American central bank, what they're doing with their interest rates, and on other data points that happen every month in the market, such as the non-farm payrolls, the housing numbers, or the manufacturing numbers. We should keep an ear on that. Not that we're going to use it to make our decisions, but especially if we're trading things like oil or like commodities, then we need to pay a little bit of attention to what happens in the data related to these particular commodities and stocks, okay? So I also want you to write down, that was a long-winded way of saying that I would also like you to write down two websites which I use just to take news and research from. One is Daily FX. Daily FX, and if you've done your launch with me, or if I have actually sent you the screenshot of my apps to your phone, you'll see that Daily FX is one of the tools that I use just to keep abreast on some of the news and some of the research that's happening in the marketplace. The other one that's extremely important for me is Forex Factory. All right, let me show you that. I'm actually going to share my screen right now, and I can share, let me show you Forex Factory. Okay, boom, boom. All right, so Forex Factory. I'm going to unmute everyone. Can you just tell me if you can see my screen? Can you all see Forex Factory?
No.
No.
No. Okay, 1 second, 1 second. Okay, you should be able to see that now. Can you see that now?
Yeah.
All right, perfect. Okay, perfect. So I'll mute you all again just to keep the noise down, okay? And then I'll unmute in a second. So what we're looking at here is we are looking at a calendar. This is a really important data calendar, and it shows us the news that is going to be coming out on any particular day. Now, why is this important, guys? Let's look at the news for tomorrow, Tuesday, the 13th of August. Okay, so I'm looking through here. We can see there's some news in Australia. The AUD is the Australian currency, and it's a business confidence. Okay, fine. It doesn't look like this is going to be impactful on the market because it's got a little orange flag, which means medium importance. Okay, immediately underneath that, 5:30 a.m. we've got the yen. There's some news coming out in the yen. 7 a.m. we've got 3 pieces of data of a euro and another yen. But the first piece of really important data that we see, and we can tell this by the red flag that's next to the currency, is at 9:30 a.m. Average earnings index for the GBP. Now, the reason why it's important is because this could affect your trading. If the number comes out way far away from the expectations, positively or negatively, then it will have an impact on that currency that you see highlighted next to the time. All right. If we continue to look down, we see that at 1:30 there is the month-on-month CPI, Consumer Price Index in the USA. Now, this is a number that is going to affect the US dollar. So if the number is far away from the expectations, which you can see over on the right-hand side, there might be an impact on the US dollar. So, guys, we are not fundamentalists. Let's make that really, really clear. We are technical analysts, but it's really important that we still at least keep one eye on the things that might move the markets on any given day. For me, that trades oil, or I like to trade oil, that it means on Wednesday, I've always got to look out for the oil inventories, which is down here at 3:30 every single Wednesday, the crude oil inventories. This is how many barrels of oil are being produced on a week by week basis. If the number of barrels goes up significantly, then there's an oversupply, which could suggest that the price of oil, if something is oversupplied, the price could fall. If the number of if the inventories drops sharply, then we know that there's going to be an undersupply, and where there's scarcity, we might see a rise in the price of oil. So, as I said, we are not fundamentalists at all. We are technical analysts, but still, it's very important to keep your eyes on this piece of data. All right. So let's just leave that there for now. That is on Forex Factory. Okay. That's on Forex Factory. So what have we gone through so far? We've gone through opening your demo account. One thing I should have said at that point is that once you open your demo account in any one of those 5 or 6 names that I gave to you, you need to open the MT4 demo. Please make that really, really clear. You need to open the MT4 demo account on any one of those platforms there, and then jump into MT4 and connect the username and password that you will be sent to your email from the platform that you registered with. Okay, let me recap that one more time. You need to open an MT4 demo account. And once you've opened your MT4 demo account, with the platform, you need to then jump across to MT4 and connect the platform using the details that will be sent to you in the email from the platform that you registered with. If anybody has any problems with that, just give me a shout, give me a call, send me an email. I'm going to help you get that sorted out. All right. We also looked at Daily FX, which is I mentioned it to you. I haven't shown it to you on my screen, but it's like a newspaper. Effectively, it's like an online magazine which is specifically dedicated to FX trading. And I spoke to you about Forex Factory, which is a way to watch the calendar of data events. The other thing that's going to become super, super, super important to you is a way to look at the charts. How are you going to know what's happening? How are you going to know when things are moving? How are you going to know when to enter a trade, when to exit a trade? Okay, well, you need a charting software. Charting software is what we are. We are chartists. We are technical analysts. And so the charting software that I use one inside my broker, which is CMC Markets. Their online software is really, really good for charting. But in addition to that, I use one called Trading View. And I would highly, highly recommend that everybody gets an account, even if it's the free account. You're going to need to get yourself an account with Trading View. I'm hoping now that you will be able to see that. I can see that it's got my the green line around it, so I can see that you can see Trading View. Right now, this is an immense tool for charting any kind of security or commodity stock, indices, bond, currency that you want. It's absolutely brilliant. So let me show you something very, very quickly. If I go to GBP USD, something that I was looking at earlier today, and it might show you my chart that I've already done. I'm not sure. Let's have a look. Is this computer running slowly or what? Okay, let's go on the fully featured chart. So really the point here, guys, is please open yourself a Trading View account. Register, even if it's for the free account. I use some of the services on the paid account. And I'll probably wait for that until you kind of you get up to speed and you know what you're doing. But with that said, it can't be underestimated how important it is to have a very good charting software. And I find that this tool is really good for what we need. Okay, so this is something that I was looking at earlier. I'm going to really simplify it so that we can so that we don't get lost. I wonder if there's a way to put everything in the bin. Okay, good. I just cleared everything. All right. When you come onto a chart, I'm going to run through this in 5 minutes so I can open up the call and then have some questions. When you come to a chart is going to look like this. You might see lines, like just a straight line, or you might see like what we have here, candles. If you have been through the IML Academy, you're going to know what these candles are, and you're going to understand that each candle is going to give you 5 pieces of information about what is happening with the price. Many people like to use these candles as the most common way to understand the markets. And I would, again, highly recommend that as you develop as traders, you really start to look at and understand candles. It might seem complicated right now, but they carry significant information on their own. And they carry even more valuable information when you start to understand the relationship of one to the other, or groups of 2, or groups of 3. It can become highly, highly predictive. And that's what we want to do as traders. We want to predict what's happening in the market as much as possible. We want to trade what we see, but where we can use the analysis to predict what's happening, then we can place ourselves what they call in front of the trade, getting ready to buy or sell before the position has actually happened. So I would recommend a book to you at this stage. If you are really wanting to take this seriously, I'd recommend a book on candlesticks. It's called Japanese Candlestick Charting Techniques by the Western father of Japanese candlesticks, called Steve Nisan. Super, super easy to read. Now, what we're talking about here, guys, we're talking about real trading. And I know there is a networking side to this business, and that's great. We all want that too. But this book is super, super easy to read. It's not like loaded up with loads and loads and loads of what. It's got lots of. In fact, I've probably gone to a page which has got the most words on it. A lot of the book is charts, images, and it's showing you how to understand combinations of candles altogether. All right, that is Japanese Candlestick Charting Techniques by Steve Nisan. As we do these calls and as we go further with these calls, I will give you more and more books and more techniques which are going to help you with your trading. Candlesticks are great. 5 pieces of information in each candle. They're very, very powerful on their own. They're even more powerful when you understand the combinations together. But here's what I would do. I'm going to unmute you now, and I'm going to show you the type of thing that I would do if I was coming to this chart for the first time. Let's just see. Hopefully it's not too loud. Okay, I've unmuted all. All right. So guys, this is what I would do if I was coming to the chart for the first time. I would take a look. The first thing I want to look at is top left-hand corner. What currency is it? Here, can you see my arrow? Can everyone see the actual cursor?
Yeah.
Okay, yeah. You can see the cursor. All right. What I'm looking at, guys? I'm looking at number 1. What is the currency that I'm trading? Now I'm trading the pound against the US dollar. The nickname for this is cable. Really, honestly, they called it cable because many years ago, in order for the UK traders to trade with the American traders, they literally ran a telephone cable underneath the Atlantic Ocean, right? So the pound against the US dollar has got a nickname called cable. What do? I look at the currency that I'm trading. I then also look at the time frame. This time frame here stands for day, D for day. If I click on it, I can change the time frame to a week or a month, or I can zoom in to 4 hours, 3 hours, 2 hours, 1 hour, whatever it might be. But really what I'm doing, I'm trying to start at a fairly decent exterior view. I want to start wide, and then I want to get narrower and narrower and narrower until I get to the point where I want to place a trade. So I don't want to overload you today. I'm going to give you the simplest thing that you can do. Look for the obvious. That's the first thing you want to do. Look for the obvious, okay? Yep. And then as you look for the obvious, you're going to start to draw and understand how to use the tools. You're going to start to draw some lines on the chart. The obvious thing is this. We can see clearly that we are in a downtrend, all right? So that's the first thing I do. I'm going to take my trending line, and I'm going to see clearly that we are in a downtrend. That's literally the first thing that I will do. I'm looking for the obvious. Okay. If I was to zoom out a little bit, what I would see is that there is a base here. This right here is a base. Even down here is a bit of a bigger base, and this is an important one. So I would take my horizontal line. I'd go take my horizontal line and say, okay, well, here's the base right there. Okay, so we've drawn a base and we've drawn a diagonal line. Now with those 2 simple lines, I'm going to show you something amazing. With those 2 simple lines, I'm going to show you something. Let's make this base a little bit thicker because it's important. We can make this a solid base here. So all we're going to do, I'm going to zoom in here, and I'm going to extend this line the same way. Okay. Now on the invite to this session, what I told you is that we're going to look at some really basic chart patterns. Now guys, if we zoom out, I don't know if you can see, but I'm zooming way out here. What we have is effectively, we have a triangle shape. Can anybody see that kind of triangle shape?
Yeah.
Yeah.
Okay. Now, once you start to understand technical analysis, this triangle shape becomes super important. It's quite funny because it's the first time I've actually looked at it like this on this call. This is effectively what we call a downward sloping triangle. Okay, let me just point. I was trying to get an arrow here, but it's not important. It's a downward sloping triangle. And when we go through technical analysis and really understand it very well, this downward sloping triangle gives us a lot of information. It tells us a lot. Now, just you can use your kind of imagination to think about this. If I was a cake maker, imagine that this was a pipe, right? If I was a cake maker, I'm going to fill my pipe here. I'm going to put all the nice creamy stuff that's going to go onto my cupcake in here, right? I'm going to put it in at the top. And then guess what's happening? This is starting to do what? You're starting to squeeze into the exit point. Can you see that? There's an exit point there.
Yeah.
So as a trader and as a technical analyst, this is a long-term chart. This is not happening anytime soon. It is a long-term chart. But one thing we can know for sure, is that we are getting to the pressure point. We are getting to a pressure point. We are moving into a triangle. If you look from here, oh man, I'm running out of time. I've got 10 minutes left on this call. Oh, sorry guys, sorry. I just clicked on the wrong button. Give me 1 second, I'm sorry. They're trying to get me to upgrade my account, which I guess I'm going to have to do at some point or another. But just a second. Okay, so going back to this chart, the type of thing that we're looking at this type of information. Okay, that we can see that clearly the price is doing what? It's moving into a pressure point. Can you see there's a pressure point here? It's moving into this funnel, and at some point or another, we are going to have to see a breakout. It's not possible for the price to stay in this funnel forever. It must do one of two things. It must break out in that direction, or it must break out in this direction. Would you agree?
Yeah.
Okay, so if you agree with me, you've basically just done your first bit of technical analysis. You know that at some point towards the end of this year, look, this is going into 2020. Some point towards the end of this year, we're going to see a breakout either one way or the other. Okay, now if you line that up with your fundamental knowledge of what is happening in this country with Brexit, you know that this is lining up kind of really, really well for, like, October's going to be where? October's going to be here, right? Can you see my October's going to be here? So it's quite possible we might see a bounce up and then a bounce out in October. Who knows? What we do know is that a downward sloping triangle usually points to the direction of the move. All right, this is a continuation pattern, and it usually points to the direction of the move. So, given our technical analysis skills, things are not looking good for the Great British Pound. All right, over the next months and years, going into 2020, and certainly before the summer of 2020, we are going to see a breakout one way or the other. And this downward sloping pattern, where we've got a slope on the top and a flat bit on the bottom, it usually indicates that this price is going to continue in the direction of travel, which is lower. All right. There are many of these kind of technical and chart patterns which you're going to have to get used to. You can study them. A lot of them are going to be on your IML videos. A lot of them are going to be on your academy. A lot of them are going to be on your TV. But you need to study these patterns one by one. You need to make your notes. You need to read them. And I'm telling you, if I see a bounce somewhere to the 125 level, which I think will happen, you know, I'm selling this again. I'm selling this again. I haven't shown you how to get into a trade yet. I've just given you a very, very basic chart. What I would be looking to do to actually trade this, to look for an entry, is I would zoom in a little bit, and I'm going to be looking for supports and resistance. I'm going to be looking for areas of support and resistance, like here and here and here. And I'll be looking to enter my trade if we get back to about the 124 or the 125 level. That's a call for another day, guys, in terms of actual trade entries. But I just wanted to give you a point that these chart patterns are chart patterns which everybody can learn. You simply just need to go through the academy, go through the IML TV, and you're going to pick up these chart patterns, which really, I just gave you a simple one, which I found right there and then. Do the obvious, put your lines and your charts on, obviously, and you're going to eventually improve at this technical trading and understand when and where to enter your trades. I'm going to try to do another trading session. I'm going to try and do these trading sessions regularly, as well as the networking sessions. But we've got 5 minutes left, and so I think it will probably be fair just for me to shut up for a while and ask if you have any questions on the trading side of things. I'm looking at the chat and seeing if I've covered everything I said we were going to do. Opening dummy accounts, yes, we've done that. Setting up your charts. You set up your charts on TradingView, please. Set up your charts on TradingView. As you can see.
Sorry, Leon.
Yeah, okay, no problem. I'll mute you, bro. I've muted you. Okay, as you can see on the right-hand side, I've set up my currencies over here. And if I click on this, I've got all of my stuff that I want to trade neatly set up. My FX majors. I've got my cryptocurrencies here that I might want to look at. I've got indices, which is the stock, the stock market. So there's lots of stuff you can do just to stay organized. Okay. Opening dummy account, setting up your charts, simple chart patterns. We didn't do setting up a trade. I think we ran out of time for setting up a trade. We can do that on the next session, but we've got about 5 minutes left for question and answers, guys. So fire away. Have I covered most of what we wanted to do today, or does anybody have any questions?
Yeah, sorry, Leon. Can you have more than one broker?
Absolutely, highly recommended. Split your spread your kind of investments across more than one broker. You can connect both of them to the same MT4 platform, and what we call twin trading, which is the same trade put across different brokers. So yeah, good idea. Very, very good idea to do that.
Okay. Sorry, in terms of the charting, when you draw the lines, your chart patterns,
yeah,
where do you actually, is it actually on the account, or is it from the charting software?
Great point. My broker has an excellent charting software. So CMC Markets has a great web charting platform. So really depends. I mean, I spent a lot of time on my brokerage charting platform, CMC, but I'm forcing myself to switch across to here onto TradingView because it's a much better technical tool with a lot more stuff available. So although there is a cost to it, once you get proficient, most proficient traders are using something like TradingView to do their charts.
Oh, okay then.
Yeah.
Okay, so the chart patterns, sorry guys, so the chart patterns is just what you draw. So is it from the trading views or from the account itself?
I didn't quite follow what you said. Say that again.
So you know he's drawing the patterns, the chart patterns.
Yep.
Is that from the actual? Would that be from the trading view?
Yeah, all of the tools to do these chart patterns are embedded in TradingView. The platform that I use, I think I pay maybe like £10 or £12 a month for it, but for me it's very well worth it.
All right. Okay.
Yeah? No problem. Any other questions, guys? We've got 3 minutes or so we can definitely get through some more questions.
Yeah, Leo.
Yeah, Tony, sorry, fire away, Tony. And you know what, guys? We don't have to rush, because if we run out of time, we can jump back on for another half an hour. We've still got 20 minutes before Montel's call, which I think we should be on. So if we run out of time in these 2 minutes, we just click on the link again and just come back in, and we'll get all of the questions answered. So let's not rush too much, okay? Tony, fire away, bro.
Yeah, just a quick question. So the reverse of what you showed here in the downtrend, would you just map it in the opposite direction if it was an uptrend?
Correct. So what we'd have to do, we're just going to read what the chart tells us, okay? So this chart tells us that there is a downward sloping triangle, that the downward sloping triangle is a continuation pattern, and that the likelihood is, not the guarantee, but that the likelihood is that the price continues in the direction that the triangle is pointing. In a downward sloping triangle. There are other triangles you need to be careful about. What we would need to do is, quite literally, if you could imagine that chart flipped on its head, try to imagine it flipped on its head. Well, now it would be an upward sloping triangle with the flat line on the top.
On the top, right?
And you'd actually draw that differently. You'd actually draw that slightly differently, okay?
Okay.
But
we'd have a line at the top, and obviously have the triangle going on.
Correct. So we'll spend some time on some technical analysis training. I'm definitely going to do some more of this for our win-win team, and really might even extend this to the wider kind of ICE community. So yeah, we'll definitely do some more of this technical analysis stuff. There's a lot, but it's brilliant, man. Once you get into it, it's almost like kind of reading a book, right? It can be. So I know there are more questions. I tell you what I'm going to do. I'm literally going to click end, and I'm going to jump back in again. And if we can all just click on the link one more time, we'll get a fresh 40 minutes, okay? So I'm going to click end on this call right now. Please just wait for 30 seconds and then click on the link. I'm going to get all of your questions answered in the next 15 minutes or so. All right, guys? Click on the link, jump back in. I'll see you in 2 minutes, and see you in 1 minute from now.
Okay.
All right, thanks.